So, have you ever wondered how a conflict happening thousands of miles away can actually hit you right in the wallet, right at the grocery store? Today, we're going to break down a source that maps out this fascinating and, honestly, kind of alarming chain reaction. It's a domino effect that starts with just one resource and ends right at your dinner table. Let's trace how it all unfolds.
Okay, so the whole argument in our source material really boils down to this one powerful idea. This isn't just about our cars or about flying on planes. The core premise here is that our entire modern world, everything from our biggest industries to our own homes, is built on and completely sustained by petroleum.
And that is the million-dollar question, right? If literally everything depends on oil, then a disruption isn't just some small inconvenience. According to the source we're looking at, it's more like a shockwave that can destabilize the whole global system. So let's trace exactly how that's supposed to happen.
So let's really dig in here. Just how deep does this dependency go? Well, our source argues that most of us, we kind of dramatically underestimate the role oil plays in our day-to-day lives. It's literally woven into the fabric of our world, and it goes way, way beyond what we just put in our gas tanks.
Okay, take a look at this list. What's really wild here is just how broad it is. I mean, sure, you've got the obvious stuff, gasoline and diesel, but our source points out that petroleum is also critical for creating plastics, for producing aluminum, and even for making sulfuric acid. But the one I really want you to pay attention to, the one that's going to be a huge deal later, is fertilizer. That's right, the very foundation of modern agriculture.
Okay, so we've got the foundation, right? Oil is in everything. Now let's talk about the trigger. Imagine a conflict just blows up in a critical geographic choke point, one of those vital arteries for global trade. What happens next isn't just about bombs and missiles. It's about total financial paralysis.
So the source we're pulling from points to the Strait of Hormuz as the perfect example. This tiny strip of water is one of the most important shipping lanes on the entire planet. When things are calm, the global economy just hums along. But the second it turns into a conflict zone, the whole system can just freeze up.
And this is where it gets really interesting because it shows a key point from the source. It's not even necessarily about ships getting sunk. The moment an area is declared a war zone, boom, huge insurance players like Lloyd's of London can just pull the plug on insuring the vessels. And if you can't get insurance, you're not sailing. Commercial shipping just stops. So the oil stops flowing, not because of a missile, but because of a signature on a piece of paper in an office.
And this quote from the source just nails it, doesn't it? Think about it. Money hates risk. It's allergic to it. The second a crisis hits, capital doesn't stick around to see what happens next. It's gone. And all the commercial activity it supports just grinds to a halt.
So all that paralysis, it leads to the first big domino to fall, the one we all feel right in our wallets, inflation. The link between war and rising prices is, according to the source, totally direct and pretty much unavoidable.
Yeah, Colonel Douglas McGregor, who's featured in our source material, he doesn't mince words. He basically argues that inflation isn't just some unfortunate side effect of war, it's part of the package deal. When you mess with the supply of the world's most important commodity, prices for everything, not just gas, are going to shoot up.
And to put a real number on it, to make it feel real, the source gives a pretty stark prediction for American consumers. It suggests this kind of chaos could easily shove gas prices up to $7, maybe even $8 a gallon, and soon.
And this chart? Wow. It really puts that number into perspective, doesn't it? You know, we might be complaining about one price here in the States, but the source points out that folks in places like Germany are already paying through the nose, over $11 a gallon. So this isn't some crazy fantasy, it's already happening somewhere else, and it just goes to show how exposed we all are to these global shocks.
But believe it or not, high gas prices are just the tip of the iceberg. The source argues the real crisis, the one most of us totally miss, is the next domino to fall. That straight line from a fuel crisis to a global food crisis. So remember how I mentioned fertilizer a minute ago? Well, this is where it becomes a game changer. Modern farming, the reason we can feed billions of people is because of these petroleum-based fertilizers. Take away cheap oil, and you take away cheap fertilizer. It's that simple.
Okay, so let's walk through it. Here's exactly how the source says these dominoes fall. First, the conflict messes with the oil supply. That sends fuel and fertilizer prices into the stratosphere. Then, farmers just can't afford to grow food like they used to, which means less food and higher prices. And we're not just talking about your grocery bill getting a little bigger. The source is warning this could lead to actual widespread famine in many parts of the world.
Just let that sink in for a second. It's a really powerful and, frankly, sobering thought. The Green Revolution, that agricultural miracle after the war that let us feed a booming global population, the source is suggesting a long-term oil crisis could literally wipe out decades of that progress.
So, all of this brings us to the final and maybe the sharpest part of this whole analysis. Given how catastrophic all this could be, you have to ask, what's the strategy here? What's the thinking behind the decisions that kick all this off? And, well, the source has a pretty sharp critique.
Okay, so just to be clear, we're laying out the perspective from our source material here. It argues that there's a real difference between the official reasons given for a conflict, things like regime change, and what it claims are the real motivations, which it says have more to do with helping out allies and controlling resources.
And this really gets to the heart of the criticism in the source. Colonel McGregor's argument is that, unlike other big global players who have these long-term national game plans, American foreign policy has become reactive. It's, in his words, impulse-driven, just jumping from one emergency to the next without a clear plan for its own good.
And that leaves us with this final question to chew on. The source maps out a pretty clear path, a direct line of dominoes, starting with a geopolitical move and ending with the price of a loaf of bread. It really makes you think. If policy is driven by short-term impulse instead of long-term strategy, who's the one that ends up paying the price? Well, it seems it's passed right down the line to regular people all across the globe.